Hello, my dear students. Hope you guys are all doing good. Hope you are all perfectly fine. So, as you all are aware, in the previous session, we have successfully completed discussing the chapter supply. So, supply, we are done with that. So, in fact, and practically speaking, in the previous chapter, we have actually understood two sections of the GST Act, CGST Act. Section 7 we have understood, and Section 8 we have understood, and the main focus in the previous chapter has been to determine what is supply. Why? Because the taxable event under GST is supply. Sir, if you do which activity, GST will get attracted? What is the taxable event under GST? So the entire taxable event under GST is supply. If there is supply, there will be GST. If there is no supply, there will be no GST. So that we have understood in the previous class what is included in the supply, what is not included in the supply, whether a supply will be treated as supply of goods or supply of services. Similarly, we have also understood a concept called composite supply, mixed supply, how to determine the tax rates in the case of composite supply and mixed supply. So all these things we have covered in our previous session. So now from this particular class, we will be starting the discussion of the chapter registration. We will be starting. We'll be starting with what? Registration chapter. See, in between, if you follow the index, in between, there is one more chapter is also there. Before this registration chapter, there is a levy and collection of tax. So that we will keep it aside. That we will discuss later. Why? Because to understand that chapter number 4 in a detailed manner, to understand that not chapter number 4 exactly, in between two chapters are there. If you follow the index, before we come to that registration, there are two more chapters in between. So like if you see the index here, we have something called charge of GST, we have something called exemptions from GST. Now what I'm doing is I'm skipping these two chapters. First we will complete registration. After we complete registration, then we look about this previous chapters. Why? Because the understanding of this charge of GST and exemptions from GST, that understanding will be much better. That understanding will become complete only when we understand the provisions of the registration in a detailed manner. So that's why I'm skipping this chapter number 3 and chapter number 4. First we will complete this registration. Once we are done with the registration, then we can understand even in a much better manner. Okay. So let us see now what is this chapter registration is all about. First of all, let us set out the agenda for this chapter. Okay. So let me take you there. Yes. So first let us try to set out what exactly is this chapter about, what we are in fact going to discuss in this particular chapter. Okay. Come on. So let us set out the agenda. What exactly in this chapter we are going to discuss. So let me set out the agenda here. Let me maintain one new notebook. Sorry guys. Just hold on for a second guys. Not this one. Okay, I will create one new notebook. So where we will maintain a dedicated thing for registration chapter. Fine. So let us see now. Hey, where have all the materials been gone? Okay. So anyhow, first let me set out the agenda. What exactly we are going to discuss in this chapter called registration. Okay. See, if you remember, like whatever we have discussed in the previous class, that we will have a quick recap. So what I was telling is, in order for the GST to be imposed, first the activity, whatever subject matter of the transaction is there, that should fall under either the definition of goods or the definition of services. This everybody remember? So when whether GST will be attracted or not, the first step in that is, first we should determine whatever the subject matter of the transaction is there, is it falling under the definition of goods or is it falling under definition of services. Then we should see, is it getting treated as supply. Why? Because we have discussed section 7, which activity will form part of supply, which activity will not form part of supply. So that all we need to analyze. So first we should see whether The activity is forming part of whether the subject matter of the transaction, whatever is there, is it falling under definition of goods or is it falling under definition of services? Then supply of such goods or services should happen. And in section 7 we have seen so many conditions that there should be supply includes all forms of supply, there should be consideration, and there should be some it should be in the course or furtherance of the business. Then it will be treated as supply of goods or services. GST will be imposed, GST will be levied. Understood? Similarly, we have seen when you are importing the services for a consideration, whether or not in the course or furtherance of the business, then also GST will be imposed. This is what section 7 subsection 1 clause A says. Section 1 7 subsection 1 clause B says this, importation of services. We even have clause AA which says that a person other than individual, if they are doing some activities or transactions to its members or constituents for consideration, then also it will be treated as supply. On that also GST will be imposed, levied. And we have seen clause C which says that if you are doing certain activities which are mentioned in schedule 1, even without consideration, even if you are not taking any consideration, but if you are doing any of the activities mentioned under schedule 1, even if they are without consideration, still they will be treated as supply. On that also GST will be imposed. On that also GST will be imposed. That means GST is leviable on the transaction. But do you think at every time whenever the GST is getting imposed, will it be collected? See, here there are two aspects. One is GST getting levied, GST is getting imposed. The other one is GST is getting collected from the recipient and making the payment to government. See, two aspects are there, guys. One is levy of GST, imposition of GST, whether GST will get attracted or not. See, once the GST is levied, the next step is you have to collect the GST and then pay that GST component to the government. So two steps are there. Assume I am running one small store, or assume that you went to certain store at the end of your street. At the end of your street, there is some small kirana store. So in that kirana store, a small kirana store is there. So you went there and you bought some goods. Or assume that there is a breakfast center, a small breakfast center is there at the end of your street. There is one small breakfast counter is there. You went there, you ate some dosa. You ate some dosa. Are you paying GST on that? Is that tiffin center wala, is he collecting GST on you? Is he giving a bill and asking you to pay the GST also? Small tiffin counter is there, very small tiffin counter. So just hardly some 10-20 people will come daily, eat the breakfast and go. You might have seen these kind of small tiffin centers which will be there in your locality. So if you go there, eat the breakfast, is he collecting GST from you? Is he giving you bill? Is he giving you bill 30 rupees on this 5 rupees GST, 35 rupees you have to pay? Did you ever collect that bill from the small tiffin counter which is there in your street? No, definitely not. You are not collecting it. He's not giving you bill. He's not paying it. So why? Because whatever example I have given, this small tiffin counter, whatever example I have given, that person is a small supplier. That person is what? Small supplier. So he is not registered with the GST department. He is not a taxable person. See, if you sell the food, it is supply. So that small tiffin counter, they are selling breakfast. That is supply of goods. There is consideration. Yes, he is charging money from you. It is in the course or furtherance of his business. Daily his business is selling the breakfast and making the money. So that activity is in the course of business also. So that small tiffin counter, every day he is making supply of goods and he is charging consideration for that, and it is in the course or furtherance of business. It is in the course or furtherance of business. Now, practically speaking, it will get covered in the supply definition as per section 7 subsection 1 clause A. So this will be treated as supply. Since it is a transfer of title in goods, this will be treated as supply of goods. On this, GST will be imposed. GST will be levied. GST is getting levied here. But is that tiffin counter, is that supplier, whoever is running that tiffin counter, is he collecting GST from you? No, he's not collecting GST from you. He's not collecting GST from you. Understood everybody what I'm trying to say? So two aspects are there. One is levy of GST and the another aspect is collection of GST and making of that payment of GST to the government. Two aspects are involved. See, till now, whatever we have seen in section 7, we have only seen whether GST will be levied or not, whether GST will be attracted or not. But in every case where the GST is getting levied, in each and every case, GST might not be collected. In every case, GST might not be collected. Why? Because in order to collect the GST, only those people will collect the GST who are taxable person. See, the term used in the act is taxable person. Taxable person means who, sir? Who has taken the registration with the GST department, who has obtained registration with the GST department. See, let me give you one more example. You all will like pani puris, no? So assume that there is one person. Every day he will have one small stall. So movable stall will be there, no? So he will carry some small stall related equipment. He will have one basket full of pani puris, and he will keep one bucket. So in that pani will be there. So you go to that pani puri vendor, and he is selling you pani puri. You go there, eat the pani puri, pay him the consideration. Assume per plate some 30 rupees you are paying. So if you observe this person, whoever is running this pani puri store, is he making supply of goods? Yes. He is making supply of goods. Is there a consideration for that? Yes, there is a consideration. You are paying him the money, no? Is it in the course or furtherance of the business? Yes. It is also in the course or furtherance of the business. Every day his business is what? Bring that stall, sell the pani puri, collect the money and go back home. So now will this be treated as supply? Yes, it will be treated as supply under section 7 subsection 1 clause A. So will GST be imposed? Yes, GST will be attracted here. GST will be imposed here. But is the pani puri wala giving you the bill and also collecting GST? On this 30 rupees is he asking to pay extra 35 rupees, extra 5 rupees of GST? No. Why? Because GST is levied here. GST is attracted here. GST is imposed here. But since the supplier is not a taxable person, he will not collect the GST. The same thing if you do it in one restaurant. For example, assume there is a restaurant. A very big restaurant is there. Fast food restaurant is there. You went to that restaurant. There you ordered a plate of pani puri and you pay the consideration. Now what will happen is this restaurant will give you a bill. Assume in the bill they are saying 100 rupees is the pani puri. On that you will be able to find in the bill GST at the rate of 10%. Take for example, they will add the GST. They will charge from you 110 rupees. See, supply is same in both the cases. When you go and eat the pani puri at the counter, which is there on beside of the road, same activity, supply of goods, consideration in the course or furtherance of business. But GST will not be collected here. Why? Because that pani puri wala is not a registered person. He is not a taxable person. The same thing, if you go and eat it in some restaurant, which is a big restaurant, there if you go and eat it, so there also same activity, supply of goods for a consideration in the course or furtherance of the business, then you will pay, then this restaurant will collect GST. He will give you bill also. On that bill he will mention the GST also. You have to pay GST also here. Understood everybody? See, in both the cases GST is getting levied, but collection is happening only in one case. So you have to make your mind now. See, whatever supply we have discussed in the previous class, in all that cases, GST will be imposed. We have seen in the previous session what is included in supply, what is not included in supply. So those activities which get included in the supply, they will be treated as supply. GST will be imposed, but GST will not be collected in each and every case. GST will be collected only when the supplier of the service is a registered person. Only when the supplier of the service is a taxable person. We will use a terminology in that. They say if the supplier is a taxable person, then only GST will be collected. Now in this chapter, what we are going to discuss is, sir, who is actually required to obtain registration, sir? Just now I have started my business. Am I required to obtain registration? Are there any conditions to be fulfilled to obtain the registration? Will I be exempted from taking registration in any cases? So like this, all the provisions regarding registration we are going to discuss in this chapter. Who is required to take the registration and what conditions are required to be fulfilled? What is the procedure for taking that registration? If you do something wrong, how the registration will be cancelled? If you want to bring back that registration which has been cancelled, how to revoke that cancellation? So like this, all the provisions relating to registration we are supposed to discuss now. Okay, so let us see here. So if you see here, in this registration chapter, we are going to cover all these sections, whatever I have listed down here. So I have mentioned a list of sections here. All this we are going to discuss in this chapter. Section 22, which talks about which persons are liable to get that registration. Who is required to obtain that registration? That is addressed in section number 22. Then who are people not liable for registration? Some people are exempted from taking registration. Even though they are doing business, some persons are not at all liable for registration. So which persons are not liable for registration? That we will discuss in section 23. Section 24, in some cases, some persons are required to get compulsory registration. There they will not check any turnover criteria, nothing. In some cases, certain persons are required to take compulsory registration. Even if you make a single transaction also, you are required to take registration. Sir, who are that persons who are required to take compulsory registration? That we will discuss in section number 24. Now, what is the procedure for registration, sir? That we will discuss in section number 25. Sometimes the registration will be deemed. What is that deemed registration? We will discuss in section number 26. Special provisions relating to casual taxable person and NRTP, non-resident taxable person. We will see that later. Sir, who is casual taxable person? Who is non-resident taxable person? For them, how to obtain registration? That is addressed in section 27. If you want to amend your registration, you have obtained registration, but in some cases you need to amend your registration. Might be you are moving the business from one place to another place, or you are changing the legal form of your business, so you want to add extra place of business. So if you want to make any changes to your registration, how to do that amendment of registration, that is covered in section number 28. Similarly, if you are fed up with your business, if you no longer want to carry on the business, then you can cancel your registration also. How to cancel the registration, how to suspend the registration, that will be covered in section number 29. And in case your registration is cancelled, but if you want to cancel that cancellation, in the sense your registration is cancelled, but if you want to bring back that registration, then how you can do it, that is discussed under section number 30. Revocation of cancellation. Your registration is cancelled, but if you want to revoke it, that means you want to bring back your business, you want to make your registration once again active. Your registration is cancelled, you did something wrong, your registration was cancelled. If you want to make that registration once again active, that we call it as revocation of cancellation of registration. That is addressed under section number 30. So all these provisions we are going to cover in this particular chapter called registration. So this chapter is going to completely talk about which person is required to be registered, which person is not required to be registered, what is the procedure for registration, how to cancel the registration, how to amend the registration, how to revoke the cancellation. So all these provisions we are going to discuss in this particular chapter called registration. I hope everybody understood till here. So I did not go into the technicalities of the chapter, just I have set the agenda. What exactly we are going to discuss in this particular chapter, that's what the agenda I have set till now. Hope everybody is comfortable with the discussion till here. So if you all are comfortable with the discussion till here, now we will go into the technicalities. Now we will take up each section and we will try to understand it. Clear everybody? So first we will start with section number 22. We will try to discuss first who are the persons who are liable for registration, who are required to get registration under GST Act. Clear everybody? So that's what we will start with now. Everybody, shall we do it? Let us do it now. Let us see what does section 22 say regarding which persons are liable to obtain registration. So we'll talk with section number 22. We'll begin our discussion with section number 22. So let us read what they are trying to say. So section 22 talking about the persons who are liable for registration. So what is it saying? Requirement of registration. Sir, who are required to obtain registration? Let us see what they are saying. Every supplier of goods or services or both is required to obtain registration in the state or union territory from where he makes a taxable supply, if his aggregate turnover exceeds a specified threshold limit in a financial year. So what they are saying is, supplier, every supplier of goods or services or both, they are required to obtain registration where in every state and union territory from where they are making taxable supply, when if their aggregate turnover exceeds specified threshold limit. They have given one threshold limit. If your aggregate turnover exceeds that specified threshold limit in a financial year, then you are required to obtain registration in each and every state or union territory from wherever you are making a taxable supply. So don't try to break your head. So I don't expect you to get the complete clarity just by reading this paragraph. There are a lot of things which are required to be discussed. Just please pay attention. Just to follow the way which I am explaining. Trust me, you will get the complete clarity of the concept. Don't worry about it. Just keep on following whatever I am trying to say here. So every supplier who is required to obtain registration, what does section number 22 say? Who is required to obtain registration? Supplier of goods. The person whoever is making supply of goods or services or both. Where he has to obtain registration? in every state or union territory from wherever he is making taxable supply. When he is required to obtain registration, if his aggregate turnover exceeds a specified threshold limit, they have mentioned one limit. If that aggregate turnover exceeds a specified threshold limit in a financial year, then they are required to take the registration. So if you see here, this paragraph addresses 3 points. A talks about who is required to take registration, who supplier. Next point, they talk about where they have to take registration in the respective state or union territory from where you are making taxable supply. Third point is addressing when you have to take the registration, who is required to take the registration, where they are required to take the registration, when they are required to take the registration. See, they are saying that first we will address this when he will be required to take registration. They are saying if the aggregate turnover exceeds specified threshold limit in the financial year. Sir, what is that threshold limit, sir? What is that limit which if exceeded, I am required to take the registration? So in order to understand that threshold limit, guys, just to follow the way which I am teaching, trust me, I will cover the entire text in the material, but I will explain the concept in one order. Follow that order only. So what is that applicable threshold limit, sir? So if you see here, the threshold limit which is prescribed under section 22 subsection 1 is 20 lakhs in a financial year. That is, every supplier whose aggregate turnover in a financial year exceeds 20 lakh rupees. If your aggregate turnover in the financial year exceeds 20 lakh rupees, what is the limit, guys? 20 lakh rupees. If it exceeds 20 lakh rupees, is liable to be registered under GST in the respective state or union territory from where he makes a taxable supply of goods and or services. So one thing we have clarified, sir, what is the limit, sir? You are telling when the aggregate turnover exceeds the specific threshold limit in the financial year, you are telling we are liable to take registration. So what is that threshold limit, sir? That threshold limit just now, as I have clarified, rupees 20 lakhs. If your aggregate turnover, if the supplier's aggregate turnover exceeds 20 lakhs in a financial year, then you are required to take the registration. Now, there is one more important thing which we need to understand. What if exceeds, we will require to take registration? They're saying turnover, aggregate turnover. They did not just say turnover, but instead what they are saying, if your aggregate turnover exceeds specified threshold limit, then you are required to obtain registration. So first we need to understand, sir, what exactly is this aggregate turnover? This we will address first. We'll address first what exactly is this aggregate turnover. So let me try to explain what exactly is that aggregate turnover. Okay, right. So let me come here. So what is aggregate turnover? Let us have an understanding. So there are two terms here actually. One is aggregate and the other one is turnover. So let us try to understand what is aggregate turnover. First of all, before we understand turnover, I want to explain what different kinds of supplies will be there. So we have seen supply definition now. So now I can broadly divide supplies into two categories. I can broadly divide supplies into two categories. One is a taxable supply. One is a taxable supply. And the other one is a non-taxable supply. One is what? Taxable supply. And the other one is what? Non-taxable supply. Taxable supply means on which you can levy a tax. On which you can levy a tax. The supply on which a tax can be levied. The government is able to levy a tax on certain supply, that we call it as taxable supply. Whereas non-taxable supplies means those supplies on which a tax cannot be levied. The supplies on which government can't levy the tax, that we call it as non-taxable supply. If I tell you, for example, alcoholic liquor for human consumption. One example is what? Alcoholic liquor for human consumption. So as we know, if you are alcoholic liquor for human consumption, it is outside of the purview of GST. No, GST is a tax on supply of goods or services or both, except alcoholic liquor for human consumption. This is how the term GST is defined under the constitution itself. So as we know, supply of alcoholic liquor for human consumption, that is not a taxable supply. And even if you remember petroleum products, like as we have seen high speed diesel, motor spirit, petroleum crude, aviation turbine fuel. So we have seen that, no? So even that petroleum products also will not come under GST purview. Why? Because as we have seen in the introduction to GST, from which date this petroleum products will come under GST purview, that will be decided in the future on the recommendations of GST Council. For the time being now, petroleum products on which GST can't be imposed. So when I say non-taxable supply, in my non-taxable supply, two activities will come: alcoholic liquor for human consumption and petroleum products. That five petroleum products. On them, the GST the GST tax is not leviable. So these will fall under non-taxable supply. Okay. So now let us talk about taxable supply. Sir, what is taxable supply, sir? Those supplies on which the tax can be collected by government. Those supplies on which government can levy and collect the tax. See, when I say taxable supplies, in the taxable supplies also, three things will get included. The taxable supply also, three things will get included. Listen carefully, guys. Very, very important discussion we are going to have here. See, there will be certain kind of supplies called nil rated supply. Nil rated supply. There will be some supplies which are wholly exempted by way of notification in way of public interest. Wholly exempted supplies. Then we have those supplies which attract a tax rate. Which attract a tax rate. So all these three activities will come under taxable supply. Don't worry, as I've told, just keep on following me. Just I will explain, don't worry about it. So taxable supplies includes three things. It includes those supplies on which actually the tax is getting levied. It also includes wholly exempted supplies. Some supplies in the public interest, they are wholly exempted. So that also will come under taxable supply only. Nil rated supply. There are certain supplies which we call them as nil rated. See, let us try to understand what is this kind of supplies which attract a tax rate. If I give you example, when you go and buy the mobile phone, if you go and buy the mobile phone, on this mobile phone, you have to pay 18% GST. You have to pay 18% GST. In fact, you will pay also. I have shown you mobile invoice also. I have shown you one iPhone invoice. So on that supply, the government is actually collecting a tax. 18% of tax they are collecting. Okay. Then when you go and buy a laptop, on that also government will impose taxation. Assume on the laptop also 18% of GST the government is collecting. If you go and buy the garments, if you go and buy a shirt, if you go and buy a trouser, the government will impose 5% of tax on that. On garments also, the government is imposing a tax and collecting it. Similarly, when you go and buy the jewelry, on jewelry also you have 3% of tax. You have 3% of tax. So all these items on which tax is getting imposed, collected, a positive rate of tax like 1%, 5%, 3%, or it could be 18%, 28%, 12%, whatever it is, those items, those supply of goods or supply of service, even services also. Assume I'm teaching, I'm taking up the CA classes. On my services, 18% of GST will be levied. 18% of GST will be levied by government. So these supplies which attract a positive rate of tax other than zero, which have either 1%, 5%, 12%, 15%, whatever it is, other than zero, if you have a positive rate of tax, those supplies we call it as will fall under this category, the supplies which attract a tax rate. Then we have wholly exempted supplies. Then we have what? Wholly exempted supplies. Take for example, milk. See, practically speaking, assume on milk 5% of GST is there. But since milk is becoming costlier because of imposition of GST, government has released a notification. What government has done? They have released a notification by way of, in the public interest, government released a notification that the supply of milk, even though there is a tax rate against it, the government told we are fully exempting the supply of milk. On milk, generally tax rate is there. But in the public interest, what government has told is they have released a notification and told on milk, since it is a necessity, in the public interest, we are wholly exempting the supply of milk from GST. Now this will become wholly exempted supply. Milk is a wholly exempted supply. Or you take further example, if the school is there, some school is providing education up to class 10. Up to class 10, a school is there which is providing the education up to class 10. So generally on education services, there is a rate of GST 18%. But what government thought is, see, education up to class 10, class 12, that is a requirement. Why? Because a country can't prosper without proper education. Now, if the government starts collecting 18% of GST on the school fees, now the education will become costlier. So this is, since education is a necessity, it should not become costlier, no? So in public interest, what government has told is they have released a notification and told we are wholly exempting the education up to class 10 or class 12. We are wholly exempting education under class 10 or up to class 10, class 12. That education we are wholly exempting. This also will become what? The supply which has been wholly exempted from tax by way of notification. Or let me give you one more example. Hospital, medical services. So on medical services, assume tax rate is 12%. But government, keeping the public interest in mind, they released a notification and told that medical services are very much important for the person's survival. If we impose GST on that also, medical services will become costly. That is not in the public interest. Government released a notification and told on medical services also we will not impose GST. We will wholly exempt them. So that will fall under wholly exempted supplies. Clear, everybody? Now, what about nil rated supply, sir? Nil rated supply means, see, there will be one rate chart will be there. There will be one rate chart. Notification is released by government which contains a rate chart. So they will mention each product, product A, product B, product C, product D, product E. So they will mention the list of supplies. For every product, they will mention at what rate it will be taxed. At what rate it will be taxed. So now assume that product A 18% is mentioned, product B 28% is mentioned, product D 5% is mentioned. Against product D 0% was mentioned. Against product D, what was mentioned? 0% was mentioned. So product D, if the government wants to tax, they might tax it in the future. Simply they will release a notification and increase this rate from 0 to 5 or 0 to 3 or 0 to 10. So even this nil rated supplies also will fall under taxable supply only. Guys, able to understand wholly exempted supplies and nil rated supplies? See, wholly exempted supplies, actually against them a tax rate is there, but government, keeping the public interest in mind, they have released a notification and wholly exempted that supply. If in future government wants to impose tax on it, what they will do is they will revoke the notification. They will make one announcement, we are revoking this notification, from today this supply also will get taxed. So that means taxable. If the government want, they can tax it. But currently, keeping the public interest in mind, they have wholly exempted it. Currently, keeping the public interest in mind, they have wholly exempted it. But if they can be taxable or not, they can be taxable. If the government wants, what they can do is they will revoke the notification simply. That's all. That supply will become taxable. But currently, keeping the public interest in mind, that has been wholly exempted. Then we have nil rated supplies. So what is nil rated supply is when you see the rate chart for which product, for which service, what kind of tax rate will be applicable. In that rate chart, you will be able to find certain supplies against which rate of tax has been mentioned as 0%. That we call them as nil rated supplies. That we will call them as what? Nil rated supplies. Now, these nil rated supplies also, if the government want to tax in the future, if they want to increase the tax rate, what they will do is simply they will make an announcement and increase the tax rate from 0 to 5, 0 to 12, 0 to 18, and that rate of GST will be collected. So that we call them as nil rated supply. Able to understand? When I say aggregate, when I say turnover of all these items will be included. Turnover of those supplies which attracted tax rate, turnover of wholly exempted supplies, turnover of nil rated supplies, turnover from this non-taxable supplies, everything will be considered. Everything will be considered. That is what the meaning of aggregate turnover. So first we are addressing turnover. When I say turnover means what? Whatever supplies you are making, whatever sales you are doing. So in your sales, in your turnover, what and all has to be included? You have to include those supplies which attract a rate of tax. You have to include those turnover from those sales where you are making wholly exempted goods. You have to include turnover of those goods which are nil rated. Even you have to consider turnover of non-taxable supplies also. Even you have to consider turnover of non-taxable supplies also. And for the sake of convenience, in the act, what they have mentioned is these three supplies collectively they are calling it as exempt supplies. Which three collectively will be called as exempt supply? Wholly exempted supplies, nil rated supplies, non-taxable supplies. These three will be collectively called as exempt supplies. Definition. This is a definition. Guys, definitions are very important. They might ask you in the examination. As a true or false statements, MCQs, there this definitions are very, very important. So when they say as per the GST Act, exempt supply means what? It includes those supplies which are wholly exempted. It includes nil rated supply. It includes non-taxable supply. All the three will be collectively called as what? Exempt supply. All the three will be collectively called as what? Exempt supply. So when I say turnover, turnover from all these products will be considered. Turnover from all these products will be considered, and that too aggregate turnover. When I say aggregate turnover, all over India, whatever turnover you have made, on all India basis, you have to add all that turnover. Then you have to check whether that aggregate turnover is within the limit of 20 lakhs or it has exceeded the limit of 20 lakhs. If it exceeded the limit of 20 lakhs, then you are required to take the registration. If it did not exceed 20 lakhs, then you are not required to take the registration. Able to understand, everybody? See, there are few more points which we need to pay attention regarding this aggregate turnover. Guys, everybody comfortable till here? So supplies are broadly divided into taxable, non-taxable. Under taxable supply, you will get those supplies which will attract a tax rate, which are wholly exempted supplies, which are nil rated supplies. Under non-taxable supply, alcoholic liquor for human consumption, petroleum products, these will come. And what do you mean by exempt supply? When they say exempt supply under GST, what and all it will include? It will include wholly exempt supplies. It will include nil rated supplies. It also includes non-taxable supplies that we call it as exempt supplies. So now, if you look at the definition of aggregate turnover, so let us have a look at the definition of aggregate turnover. See here, pay attention. Come on, very, very important point. High chances of getting tested in the examination. That's why I'm spending a lot of time in explaining this. So many illustrations also I will give. Listen carefully. Aggregate turnover. The definition of aggregate turnover as contained in 2(6) of the CGST Act is analyzed as follows. The aggregate turnover is sum of all outward supplies. Outward supplies means the supplies which you are making, sales, not inward supplies. Inward supplies are purchases. When I say aggregate turnover, it is a sum of value of all outward supplies falling in the following four categories. It includes taxable supplies also. It includes exempt supplies also. I told you what do you mean by exempt supplies. It includes export of goods or services or both. Even if you are doing export, for example, I'm a manufacturer of mobile phone. I'm manufacturing my mobiles and I'm exporting it to US. Even that export turnover also will be taken into aggregate turnover. So it includes exports. It also includes interstate supplies of persons having the same PAN, that to be computed on all India basis. Nothing but same PAN, two different registrations, that we call it as what? Distinct persons. Remember the definition of distinct persons? Listen carefully, don't worry, I will give you examples, please pay attention. So what is aggregate turnover? What they are saying, aggregate turnover is sum of four supplies. What are the sum of four supplies? It includes taxable supplies, exempt supplies, exports, interstate supplies between the two different people having same PAN. That also will form part of aggregate turnover. Now, meaning of exempt supplies, I have already told. First, let us complete the D point, meaning of exempt supply. What is the meaning of exempt supply? Which attracts nil rate of tax, that is nil rated supplies, which may be wholly exempt from tax, which are wholly exempted from tax by way of notification. It also includes non-taxable supply. It also includes what? Non-taxable supply. Everybody comfortable till here? So now we will do illustrations. Come on, let us do the illustrations. You have to be paying complete attention now. So what they are saying, aggregate turnover. First of all, aggregate turnover. What is aggregate turnover? Sum of all. What sum of all? It includes sum of taxable supplies. That means which attracts a rate of tax. It includes exempt supplies also. When I say exempt supply, as per the definition, just now as we have covered, what and all will be included in the exempt supply? When I say exempt supply, what and all will be included? It includes nil rated supplies. It includes wholly exempted supplies. It includes even non-taxable supply. Okay, so everything will be included in the exempt supply. All these three you have to add. To this, you have to add exports. You have to add what? Exports. If you are making any export of goods, export of services, that exports also you have to add. To that, even you should add interstate supply of goods or services between the persons having same PAN. Between the persons having same PAN. So let us focus on this last point. What is this interstate supplies? very simple, guys. Assume I'm a businessman. I'm having a PAN. Okay, I have a PAN card, no? PAN card, which is given by this income tax department. You will have that PAN card, no? So you will have a PAN card. I am having a business in Andhra Pradesh. I'm having a business in Andhra Pradesh. I have a place of business in my Andhra Pradesh. There is another place of business. For example, Tamil Nadu. There is another place of business. So this is a place of business is there in Tamil Nadu. I did not obtain registration yet. But both the entities belong to the same person having the same PAN. Have a same PAN. So I am having a place of business in AP state also. I am having a place of business in Tamil Nadu state also. See, if I am supplying some goods or services from my AP location to my location only, to my business only, which is there in Tamil Nadu. So even if there is no consideration for that, this also should be included in the aggregate turnover. See, if you have already registered, see, we are talking about non-registered entity. We are saying when entity is required to obtain registration. No, able to understand. For that purpose, they are asking you to include in the aggregate turnover whatever interstate supplies that is happening. So if you read it here, so if you go to the section, interstate supplies of persons having same PAN. If there are two entities operating under same PAN and if there is interstate supply happening between those two entities having the same PAN, even that supplies, even that value also has to be included in the aggregate turnover. Even that value has also to be included in aggregate turnover. So if you add all this turnover, taxable supplies, exempt supplies, exports, interstate supply of goods or services between persons having the same PAN. Two entities are there in two different states. Both are belonging to the same person, having same PAN. If there is any supply happening between the two, that interstate supply is also required to be considered, even without consideration. See, for interstate supply, if there is a consideration, that anyhow we will add it in my turnover. If I am making an interstate supply to some other person, not to the person having same PAN, if I am making an interstate supply to some other different person, that anyhow will be included in turnover. That will anyhow come in taxable supply. But even they're specifically saying if there is any interstate supply of goods or services between two entities of the person having same PAN, even though they both belong to the same person, still you have to treat it as a distinct person. Even that turnover also should be added for the purpose of calculating aggregate turnover. For the purpose of calculating aggregate turnover. Understood, everybody? So now you have to add all this on all India basis, not just in one state, guys. If you are having business in multiple states, from all the states, from each state, you have to add up this all four figures. Now for all locations, you have to add up all the turnover. Now that becomes aggregate turnover. That you need to check, is it within the limit of 20 lakhs or has it exceeded beyond the limit of 20 lakh rupees? If on all India basis, put together all the states turnover, if it has exceeded the threshold limit of 20 lakh rupees, then you are required to take registration where in each state or union territory from wherever you are making a taxable supply. From wherever you are making a taxable supply. Come on, now let us try to understand it with the help of example. Assume that I am a person, I am not yet registered. I want to know whether my business will be, whether I am required to get registration or not. See, I am having a place of business in Tamil Nadu. In the Tamil Nadu, I made supply. I made some turnover. Like for example, I made a individual wise also I will say. So I made a turnover of taxable supplies, 1 lakh rupees of taxable supply. I made exempt supplies of 1 lakh. I made interstate movement from Tamil Nadu state. I am having another place of business in Andhra Pradesh. From my Tamil Nadu place of business to Andhra Pradesh business, I have made a supply of 1 lakh rupees. So interstate supply between two entities having same PAN. So all this will be included. So in my Tamil Nadu state, what is my entire turnover? In my Tamil Nadu state, my entire turnover is 3 lakh rupees. Okay, now I have a place of business in AP also. From the AP place of business, I made a taxable supply of how much? Assume some 5 lakh rupees of taxable supply I have made. Now in AP business, I am in AP location, I am also selling alcoholic liquor for human consumption. What I'm doing? Alcoholic liquor for human consumption. From this business, I made another 5 lakhs. Should I consider an aggregate turnover? Yes. Why? Because you have to include turnover from non-taxable supply also for the purpose of calculating aggregate turnover. So from AP location, I made a turnover of some 10 lakh rupees. Then I have made taxable supply. I am also having a place of business in Karnataka. In Karnataka, I made a taxable supply worth some 3 lakh rupees. I have supplied here some exempt supplies. I have made some exempt supplies of some 5 lakh rupees. So what is my turnover in Karnataka? The turnover in the state of Karnataka is 8 lakh rupees. Now, in order to know whether I am liable for registration or not, I need to check aggregate turnover. I need to check what? Aggregate turnover PAN wise on all India basis. See, for all these three entities, I am the single person having same PAN. So under my PAN on all India basis, I have to add the turnover. So if I add it, what will be my aggregate turnover on all India level? My aggregate turnover will be 3 lakh rupees plus 10 lakh rupees plus 8 lakh rupees. If I add it, has become 21 lakhs. It has exceeded the limit of 20 lakh rupees. Now I am liable to take registration. Now I am liable to take registration. Where I have to take the where I have to take registration, sir? In each state or union territory where I am making taxable supply. See, I am making taxable supply from Tamil Nadu. I will take registration in the state of Tamil Nadu. I am taking taxable supply from AP. I will take the registration from AP government. I am making taxable supply from Karnataka. I will take the registration from Karnataka government. So, for checking whether I am applicable or not, I need to check the turnover of all over India, not in each state. Now, you can't go and argue there, sir, in AP government, in AP state, I am making only 10 lakh rupees of turnover. I will not obtain registration. Can you argue it? No. Why? Because what is the condition they are saying? If your aggregate turnover on all India basis, if it has exceeded 20 lakh rupees, you are required to take registration in each state or union territory from where you are making taxable supply. From wherever you are making taxable supply, from there you have to take the registration, provided if your all India aggregate turnover has exceeded how much amount? 20 lakh rupees. Able to understand? Clear, everybody? Come on, everybody repeat. What and all will be included in aggregate turnover? It is a sum of the sum of supplies made all over India of what? It includes taxable supplies. It includes exempt supplies. It should include even what else it has to be included? Exports. Whatever exports you are making, that also should be included. It also includes interstate supplies made between two different persons having same PAN. That also should be considered. That also should be considered. And what will be included in the exempt supply, sir? When I say exempt supply, you have to consider nil rated supply also. You have to consider wholly exempted supply also. You have to even consider non-taxable supplies also. Along with that, you should add exports. You should add interstate movement of goods or services between the two different persons having same PAN. That also should be added. Then the total value you will get, that I call it as aggregate turnover, that you have to check with the threshold limit. That you have to check with threshold limit. Understood? Comfortable, everybody, till here? We will do more illustrations. We will do some more illustrations. So assume that I am a person. Okay, I am having place of business in Andhra Pradesh. Okay, from there I have made taxable supply. I have made a taxable supply of, assume, some 12 lakh rupees of taxable supply I have made. I have the place of business in Tamil Nadu also. In Tamil Nadu also, I have made a taxable supply of how much? Assume some 12 lakh rupees. Am I required to obtain registration? Yes. What is the aggregate turnover here? Your aggregate turnover on all India basis is 20 lakh rupees. Since it has exceeded the threshold limit of how much? 20 lakh rupees. Are you required to take registration? Yes. Where you will take registration? I will take registration with AP government since I am making taxable supply here. I will also take registration with Tamil Nadu government. Why? Because there also I am making taxable supply. Everybody comfortable till here? One more example. Let me give you one more example. So I am another registered person. I have a place of business in Karnataka. In Karnataka, I am making taxable supply of 8 lakh rupees. I am making some non-taxable supply also. When I say non-taxable supply, I am supplying alcoholic liquor for human consumption. Imagine. So I am making 5 lakhs of non-taxable supply from Karnataka. And I also have a place of business in Kerala. In Kerala, I am only making supply of non-taxable service. I'm only making supply of non-taxable supply. In Kerala, I'm only selling alcoholic liquor for human consumption. In Kerala, I have made some 10 lakh rupees of turnover from that. Now, we need to check aggregate turnover. First step is what? Aggregate turnover. Guys, what is aggregate turnover? So, in Karnataka, the total turnover is how much? 13 lakh rupees. In Kerala, the total turnover is 10 lakh. See, for the purpose of calculation of aggregate turnover, I need to consider even turnover from non-taxable supplies also, right? So now what will be my aggregate turnover on all India basis? 13 lakh rupees plus 10 lakh rupees, it will become 23 lakhs. So my aggregate turnover, has it exceeded the limit of 20 lakh? Yes. Am I required to obtain registration? Yes. Where I will obtain registration? From whatever state or union territory from which I am making taxable supply, there only I will take registration. See, in the Karnataka state, I am making taxable supply. I am also making non-taxable supply, but part of taxable supply also I am making. I will take a registration with Karnataka government. Will I take registration with the Kerala government? No. Why no? Why? Because you are not making any taxable supply from the Kerala state. From the Kerala state, you are not making any taxable supply. See, if you read the terminology once again, so what do they say here is, come on, let us come back to the thing here. So today this thing is troubling me, sorry. Yeah. So if we read once again, whatever we have read, every supplier of goods or services or both is required to obtain registration. When? If his aggregate turnover exceeds the specified threshold limit. Did our limit exceeded here? So whatever example we are doing, is this limit exceeded here? Yes, our aggregate the hell man. So our aggregate turnover has become 23 lakhs. Overall aggregate turnover has exceeded. Now let us address the issue where you should get the registration. Where you should get the registration, guys. So what do they say here in the second point? In the state or union territory from wherever you are making taxable supply. So you are required to obtain registration only in that state or union territory from where you are making taxable supply. So now if you look at this example once again, see, I am having my business in, so sorry guys, today it's a bit troubling. Right. So I'm having a presence in Karnataka state as well as Kerala state, and my aggregate turnover has exceeded my threshold limit. Now I will take registration in each state or union territory from wherever I am making taxable supply. See here, I am making taxable supply only in Kerala state, only in Karnataka state. In the Kerala state, even my presence is there, but from the Kerala state, I am not making any taxable supply. I am not required to take registration in the Kerala state. See, this is how you need to read the provisions. So what they are saying here, everybody, every supplier of goods or services are required to take registration in state or union territory from wherever they are making taxable supply if their aggregate turnover in the if their aggregate turnover in the financial year exceeds how much? Specified threshold limit. They are required to take registration only in that respective state or union territory from wherever they are making taxable supply. See, assume you are having a presence in one state, but from there you are not making any taxable supply. No need to take registration. Even if your aggregate turnover exceeded the prescribed limit, but in particular state you are not making any taxable supply, no need to take registration. You are required to take registration only from that state where you are making taxable supply. Clear everybody here? Now see, there is one more thing which I want to clarify regarding this limits. See, we have special category states. No, in the GST and introduction chapter we have seen 11 special category states. What are the 11 special category states? Even I have told you mnemonic to remember. Manshet, Jammu Kashmir. Manshet, Jammu and Kashmir. So M stands for Manipur, Mizoram, Meghalaya. A stands for Assam and Arunachal Pradesh. N for Nagaland. S for Sikkim, Himachal Pradesh, Uttarakhand, Tripura, Jammu Kashmir. See, these are 11 special category states. No, I told when it comes to 11 special categories, 11 special category states, GST Council can make special provisions. So now what has happened is some of the special category states came and told, sir, we want our limit to get reduced. You are telling when the limit exceeds 20 lakhs, you are required to take registration. But out of this 11 special category states, 4 special category states came forward and told, sir, for us 10 lakh rupees of limit will be enough. So which 4 states have come forward? However, in respect of 4 special category states, which are Mizoram, Tripura, Manipur and Nagaland. So you can remember it as MMNT. So 4 states, 4 special category states came forward and told, sir, in our states, if they are having a place of business, if they are making a taxable supply from any of these 4 states, We want the registration only if the threshold limit is 10 lakh rupees. So these four states, why they have done that? Why? Because if you observe these special category states, these are somewhat backward states. They don't have enough of economic activity. Now there also, if you keep the limit of 20 lakh rupees, 20 lakh rupees will be a big figure for them. If you keep the limit also there 4 lakh rupees, then what will happen is most of the people will not be required to take registration. Why? Because in these states, economic activity will be very less. Then the government will not have any revenue. If they have less registrations, they will not get more GST revenue. No, so that's why state governments came and told state governments came forward and told not all the special states, only four special states. What are they? Repeat, guys. The more you repeat, the more you remember. Four special category states came forward. Which are they? Mizoram, Tripura, Manipur, Nagaland. So these four states, Mizoram, Manipur, Tripura, and Nagaland. These four states came forward and told, sir, we want the limit of only 10 lakh rupees. So now what they have told is, if you read it here, however, in respect of four special category states, that is only Mizoram, Tripura, Manipur and Nagaland, the threshold limit is 10 lakh rupees only in a financial year. Now, how this will have an impact on deciding the registration requirement? Let us see. Now, once again, guys, interesting discussion we are going to have. Please pay attention. So, four states. Mention what are the four states? Manipur, Mizoram, Nagaland, Tripura, MMNT. In these four states, from any of these four states, if the supplier is making a taxable supply, from any of these four states, if the supplier is making a taxable supply, then the threshold limit for getting registration is only 10 lakh rupees, not 20 lakh rupees. Now let us see how this will impact our registration applicability. Come on, everybody participate. There is a person, business person. Okay, he is having a place of business in Andhra Pradesh. From Andhra Pradesh, he is making taxable supplies of amount 12 lakh rupees. He is having a place of business in Manipur. He is having a place of business in Manipur. From Manipur, he is making taxable supply of, assume some 5 lakh rupees of taxable supply he is making. 5 lakh rupees of taxable supply he is making. Now you tell me, what is the aggregate turnover? What is the aggregate turnover? The aggregate turnover in this case is 17 lakh rupees. What will be the threshold limit for making registration? Threshold limit. See, normal threshold limit is what? 20 lakh rupees. But since this business person is making taxable supply from Manipur, one of the four states, MMNT, Manipur, Mizoram, Nagaland, Tripura. Since he is making a taxable supply from Manipur, now the limit will be applicable aggregate turnover limit will be 10 lakh rupees only. Applicable aggregate turnover limit will be 10 lakh rupees only. Sir, he is having place of business in AP, no? You might have, but you are having a place of business in one of that four states, no? If you are making a taxable supply from any of these four states, MMNT, the overall aggregate turnover limit is only 10 lakh rupees, not 20 lakh rupees. So here the aggregate turnover is 17 lakh rupees, which is more than 10 lakh rupees. Now this person has to take registration. He is required to take the registration in AP state also. He is required to take the registration in Manipur also. Sir, why only 10 lakhs here? Why? Because he is making a taxable supply from that four special category states which have availed the reduced threshold limit of 10 lakh. What are the four special category states? Manipur, Mizoram, Nagaland and Tripura. So let me tell you one more example. Guys, I will tell you so many permutations, combinations, you have to keep on participating. There is a business person. He is making a taxable supply from Andhra Pradesh. Taxable supply he made, assume somewhere around 10 lakh. He is making taxable supply from Tamil Nadu. From Tamil Nadu, the taxable supply is 5 lakh rupees. From Tamil Nadu, the taxable supply is 5 lakh rupees. What will be aggregate turnover here? Aggregate turnover is 15 lakh rupees. What is the threshold limit here? What will be the threshold limit? Here threshold limit is 20 lakhs only. Why 20 lakhs? Why? Because this business person is not making taxable supply from any of these four states. Since he is not making supply from any of these four states, the applicable threshold limit will be 20 lakh rupees only. He is not required to take registration neither in AP state nor he is required to take registration in Tamil Nadu state. Clear? One more example. Let me tell you one more example. There is a business person. He is there in Karnataka. In Karnataka, he is making taxable supply. Assume he is making a taxable supply of 9 lakh rupees here. He is having a place of business in Nagaland. From Nagaland also he made a taxable supply. From Nagaland he made some 5 lakh rupees of taxable supply. Now what is the aggregate turnover here? The aggregate turnover is 14 lakh. What is the applicable threshold limit here? See, since the business person is making taxable supply from one of the four special category states, the applicable threshold limit will be only 10 lakh rupees. Since the aggregate turnover exceeded the threshold limit, this person is required to take registration in the Karnataka also, he is required to take registration in the Nagaland also. Why? Because from both the states he is making taxable supply. So always remember this thumb rule. If the business person is not making any taxable supply from any of that four states, MMNT, Manipur, Mizoram, Nagaland, Tripura, then applicable threshold limit will be 20. If the business person is making a taxable supply from any of these four states, then the applicable threshold limit will be 10 lakhs only. And if the aggregate turnover exceeds 10 lakhs, is required to take registration from every state and union territory from which he is making taxable supply. Okay, so let me tell you one more example. So there is a business person, he is making supply from Tamil Nadu. He is making non-taxable supply. He is selling alcoholic liquor for human consumption of how much value? Assume some 9 lakh rupees. He is having a place of business in Tripura. From Tripura, he made a taxable supply. From Tripura, he made taxable supply. So aggregate the turnover which he made from Tripura is taxable supply, which he made is some 3 lakh rupees. Now you tell me what is the aggregate turnover? It is 12 lakh. What is the applicable threshold limit? Since he is making a taxable supply from one of that four special category states, applicable threshold limit will be 10 lakh. Since aggregate turnover exceeded the threshold limit, he is required to take registration. Where he will take registration? Only from that state where he is making taxable supply. Now in this case, he will take registration only in Tripura. In Tamil Nadu, he will not take registration. Why? Why? Because from Tamil Nadu, he is not making any taxable supply. Tamil Nadu is not making any taxable supply. Understood? Next, let us understand one more example carefully. So now assume that there is a business person from Karnataka, he is making taxable supply 12 lakh rupees. From Mizoram, he is making non-taxable supply. In Mizoram, he is supplying alcoholic liquor for human consumption, assume some 5 lakh rupees. What is the aggregate turnover? The aggregate turnover is 17 lakhs. What is the applicable threshold limit here? What is the applicable threshold limit here? 10 or 20? 10 or 20? Not 10, it is 20 only. Not 10, it is 20. A doubt will come. Sir, he is making supply from Mizoram, no? But what did I say? If he is making taxable supply from any of that four special category states, if he makes taxable supply from four special category states, he is making supply from Mizoram, but he is making what? Non-taxable supply. So here 10 lakhs will not come, 20 lakh rupees only will be the limit. Since aggregate turnover is less than the threshold limit, no registration is required to be obtained. Clear? Able to understand? So the limit of 10 lakhs will become applicable only when the business person is making taxable supply from any of the four states. Which four states? MMNT, Manipur, Mizoram, Nagaland, Tripura. So if a registered person making a taxable supply from any of these four states, then the applicable threshold limit will be 10 lakh rupees. Then he is required to take registration in each and every state from wherever he is making taxable supply. Clear? See, let me give you one more example. There is a business person. He's doing business in Maharashtra. In Maharashtra also, he's having non-taxable supply. He's supplying alcoholic liquor for human consumption, and he made some 10 lakh rupees of supply there. Then he's also having place of business in Nagaland. From Nagaland also, he's supplying alcoholic liquor for human consumption only. So some 5 lakh rupees of 5 lakh rupees of turnover he has made there. Now, what is the aggregate turnover? 15 lakh rupees. Now, what is the applicable threshold limit? The applicable threshold limit here will be 10 only. Why? Because he is not making any taxable supply. Sorry, 20 only. Why? Because he is not making any taxable supply from 4 states. Applicable threshold limit is 20. So, since the aggregate turnover is less than 20, is he required to take registration? No. Let me give you one more example. So, I assume there is a person in Madhya Pradesh. From Madhya Pradesh, he is making non-taxable supply, supplying alcoholic liquor for human consumption, 15 lakh. He is also having place of business in Mizoram. In Mizoram also, he is supplying alcoholic liquor for human consumption, again 15 lakh. What is the aggregate turnover here? 30. What is the applicable threshold limit? Since he is not making any taxable supply from any of the 4 states, applicable threshold limit will be 20 lakhs only. Here aggregate turnover is more than threshold limit, but is he required to take any registration? No. Why? Because from both the states he is not making any taxable supply. He is making what? Non-taxable supplies only. No need to take the registration. Understood? So in order to determine whether a person is required to take registration or not, first you need to calculate what is the aggregate turnover. In the aggregate turnover, all kinds of turnover will come. It will include taxable supplies also. It will include exempt supplies also. When I say exempt, three things will be included here: nil rated, wholly exempt, non-taxable supply. You have to even include exports turnover also. Along with that, you should also include interstate supply of goods or services between two entities of the person having same PAN. That also should be included. So you have to calculate what is the aggregate turnover. Once you have calculated the aggregate turnover, the second step is checking the threshold limit. How to check the threshold limit? First, you need to check, is he making any taxable supply from four special category states, MMND? If yes, applicable threshold limit is 10 lakh rupees only. If he is not making any taxable supply, no taxable supply, no supply from MMND or no taxable supply from MMND. In both the cases, the threshold limit will be 20 lakh rupees. Now, if the aggregate turnover has exceeded more than threshold limit, then what will happen? Registration he is required to take. Where he is required to take the registration? From such state or union territory in which he is making from which he is making taxable supply. From which he is making what? Taxable supply. Able to understand? So this is how you need to check how he is required to obtain registration. Everyone able to follow, guys? Clear and comfortable, everybody? So we will end our discussion here. We will stop our discussion here. Remaining discussion we will have it in our next class. Guys, aggregate turnover discussion is not yet over. Aggregate turnover discussion is not yet over. Still there are some things which are required to be discussed regarding aggregate turnover. So if you pay attention here, we have only seen one part. What is included in the aggregate turnover we have seen. There are some things which are excluded from aggregate turnover. This we did not cover it yet. So this we will see it in our next class. So a quick recap. What and all we have covered? We have told why this chapter, what we are going to learn in this chapter. Agenda we have set out. Then we have started discussing sections 22. What does section 22 say? Who is required to take registration? What does it say? Every supplier of goods or services or both, they are required to take registration if their aggregate turnover exceeds a threshold limit. We have seen what is the threshold limit. What is the threshold limit? Generally 20 lakh rupees. But if a person is making any taxable supply from the state of Manipur, Mizoram, Tripura and Nagaland, MMND. So I have shown you also, no? So Manipur, Mizoram, Tripura and Nagaland, MMND, from any of these four states, if you are making taxable supply, 10 lakh rupees will be the threshold limit. So once your aggregate turnover on all India basis, you have to calculate the total aggregate turnover. When it has exceeded the threshold limit, you are required to take registration. Where you are required to take registration? In each state or union territory from wherever you are making taxable supply. Assume your aggregate turnover has exceeded the threshold limit, but in one state you are not making any taxable supply. Then what will happen? No need to take the registration for that area. If your aggregate turnover exceeded the threshold limit, but in none of the state you are making taxable supply, no need to take registration at all. So you are required to take registration only from that state or union territory from wherever you are making taxable supply. Understood? Clear and comfortable, everybody? So this is what the discussion we had today. We will resume it. We will pause it here. We will take up the discussion further exactly from the same point in our next class. Comfortable, everybody? So this is what regarding the session. See you again in the next class, guys. Bye. Take care.